Hello there, traders. Hello, fellow champions. Welcome to another video of Trading for a Living Forex Champion series. So, for today's video, I'll be sharing with you the importance of a trading checklist and how it will help you be structured, be systematic, and even setting yourself some rules or criteria when it comes to trading entries. So, without further ado, let's get straight into the charts. All right, so what do we have here? So normally, the normal process that I do when it comes to entering a specific trade, I always set myself some checklist, right? So what are those checklists? I'll be sharing with you these important uh, questions or even statements that will help you be better in your trading. All right. So Uh, what are those things? Uh, so basically, whenever I place a trade, incorporating naked chart trading, I always ask myself these things. All right, I already have shared some of this in my past video. However, I will give more emphasis on this for this specific episode. All right, so whenever I place a trade, I always ask myself, what is the trend or the market structure of the current market price? Right? Is it bullish in manner or is it bearish? So that's the first question you should ask yourself. So this is like a very basic checklist. However, this will help you be disciplined, be selective on your trades. If it doesn't meet your checklist, definitely you'll not be able to place a trade. Right? What is the advantage of not placing a trade if there's no setup? Definitely, you'll be preventing possible losses on that specific trade. All right. So first is, what is the trend or market structure? Is it bullish or bearish? Ask yourself that question. First things first. Secondly, where am I at the level or zone? So am I at the zone like resistance or support? Am I at the middle or am I still approaching those zones? All right. And then after that, if you meet this checklist or this item number two, then you will probably go to a lower time frame to check for confirmation. So that would be definitely you will look for candlestick patterns or confirmation candles like buying or selling pressure. And after that, prior to entering a trade, you should definitely know what is your risk percentage, what is your risk appetite, and what is the amount of money you can afford to lose without affecting your emotions or the psychological aspects of yourself. All right. So this is a basic checklist. However, this can be a good habit for you whenever you place a certain trade. All right. So let's analyze this specific chart on dollar Swiss. All right. So I will go to a higher time frame. Let's say the 4 hours, H4. So what do we have here? The first thing on my checklist is, what is the trend or the market structure? What is the market showing me or telling me right now? All right. So what do we have here? If we analyze on a higher time frame scale, we can see that the price, what? Let me check. Right. The price moved impulsively on a downward direction, right? So after that, what did the price do? The price moved, what? Forming a what? A lower high, meaning a lower level, lower than your previous high, right? And then after that, what? The market or the price formed a what? A higher low, meaning a low higher than your previous low. All right. Then what's next? The price moved again. What? A lower what? A lower high, a level lower than your previous high. So after that, the price currently now is what? Moving downwards. So what do we expect? So we have two levels here. All right, I will just delete this arrows. So we know at this point, right? At this point, we know that the price formed what? A higher low. So which means what? The price can move what? Higher than this level. However, at this point as well, the price created a lower high. So which means this manner, the price is still on a state of indecision or consolidation, because we still don't know yet. There's no really an indication that the price will move strongly upward or downward. So how can we find an opportunity at this state of the market? All right. So first thing, we know that the price came from what? A lower high, which means the next move would probably what? Uh, Probably the price would have a lower low, since this overall trend of the market would probably create what? A bearish move of the market. So how can we find an opportunity? So first thing, we know that the market would probably move downward, right? So where is the level that the price would probably react? So that's the next question. So we can see here what? Key significant level or zones. So how can we find a clear key significant level or zones? So we can simply what? Mark or change our chart to a line chart to check the significant level or structure that the price would probably react. All right? So we have here a possible area of interest wherein the price would react and probably move until here or even react upward, since we know that the price also created a higher low. So we will check the price action at this level as well. So secondly, we can also see here another level wherein the price could probably go to. So we have two zones that the price would probably go, either here or here. But definitely we will look for the price action prior to entering a specific trade. So how can we find an opportunity? So let's go back to the candlestick chart. All right. So we now have our key significant level or zones. All right. So next thing, we already know our key resistance and key support levels. So where am I at the zone? So am I at the middle? Am I already at the zone, or am I already approaching these zones? So that's the question. So we can see that the price is approaching our support zone over here. So how can we find an opportunity? We will go down to a lower time frame to look for a better entry or opportunities. So same process, we will look for the structure of the market. So what do we have here? The price came from this level and then formed what? A lower high, and then formed what? A higher low. However, after that, the price moved and created a lower high as well, and breaking what? Breaking this structure here. So we know that the price already broke this lower high, which means the momentum now is going down. So how can we find an opportunity? We expect the market after this move down. So what do we have? From a high and then low, then lower high, and then we expect the market to at least go here, or even since we have a minor structure here, right? We can see that the price can probably go where? Here, forming another what? Lower high prior to moving at this zone. So what if the price go through this zone? Definitely we will look for the price action of a bullish confirmation candle, right? So we have two scenarios here, but we know our zones where we at the current market on a higher time frame. So we know that the market price broke this structure, so we expect the price to move higher for a correction, forming another what? Another lower high, which means the market in this state is a bearish what? Bearish market. All right, if I'm going to sell this market, I would definitely wait for the price to come back where? At this price level, at this resistance level, right? This is a high probability trade area for me because uh, the price broke this structure. Definitely the price would go and correct itself, returning at this zone for a much better entry prior to going where? Here, or even at our lower support level or zone, right? So we have two scenarios. Either it will go through here, bounce, or here prior, right? Or even going straight here, right? So we have several scenarios here. But then again, whenever we place a trade, we always want to make sure the price action reveal itself for us to have an opportunity for an either a sell or a buy opportunity. All right, we always look for candlestick formations. So that is how we analyze the market structure of uh, a certain pair at this current what? At this current uh, time frame. Right? So currently I'm on an hour time frame coming from where? Coming from an H4 time frame. So would that be enough for me to place a trade if ever I see a candlestick formation here? So we can see here that the price is currently reacting at this mini level or zone here. So we can say that we can look for an opportunity going up. However, if there's no candlestick formation that we're looking for, definitely we will just observe and watch for the market price movement. All right. At the same time, we can also look for a lower time frame again to check the overall in detail candlestick formation. So currently now there's no confirmation for me. So I will just sit around, wait for the market to show me what I am looking for. Right? So you see how I analyze a certain pair coming from an H4. Definitely, you should look first what is the overall trend of the market at this current state. So is it bullish, bearish, and where am I at the zone? Am I already at the resistance, at the support? Am I at the middle, or am I still approaching? All right. So on an H4 time frame, I'm still approaching where? Approaching this support level. However, going to a lower time frame, I can see that there's a mini level or zone here that the price could react to give me an opportunity going up and even selling here at the broken structure at H1 level, right? So we should set ourselves some some scenarios wherein the price could react. Again, we should be reactive more than predictive. Right? So whenever we look for opportunities, definitely we look for the price action prior entry. That is how we make a trade or we place a trade at a certain time frame. So I will expect the price to at least go back to this level for me to sell this market. If ever I would sell this market, well, I can look for a trade uh, going here, almost 1 is to 1, 1 is to 1.5. However, I can set my long, uh, my higher time frame target until here, depending on the price action from here going to here, what this support level. All right. So again, I will not take the trade blindly as long as I didn't see any price action that confirms my bias, if it is a sell or if it is a buy. All right. So that is how I analyze a certain pair using price action, naked trading, as well as only using basic candlestick formation, right? If we look to the lower time frame, let me check. So we can see here that currently there is really no confirmation yet that I'm looking for me to either buy this market going here, but I would expect the price to at least go back to this level for me to sell this market, since the overall market bias on the H4 is a downtrend. All right. So either way, since the price is in consolidation, forming a higher low and then suddenly forming what, a lower high. All right. So we can look for an opportunity on both sides. Either we buy this market given this range, or we sell this market at this level. All right. So that is one way on how to approach the market using just basic checklists. So again, you can make your own checklist. You can make any checklist that you want depending if you're using an indicator like moving averages, RSI. So if you're using any indicators, probably you're gonna use moving averages or RSI. That will help you decide whether you're going to place a trade or not. Again, you can customize every trading checklist. Again, this is just for me, right? I can have my own more detailed checklist prior entering a trade. But the thing here is, the logic here is, before we enter a trade, we should have a confirmation on our side using basic checklists in order for us to determine if the market would probably go on our way or against our way. So that would set us a high probability trade setup. Again, it's not only a matter of strategy or using any indicators, but the good thing is we can set ourselves, customize our trading checklist to improve our entries, exits, and how we approach the market. Right, so let's check another pair. What do we have here? All right. So what do we have here? So I am now at Euro Yen. So if I would apply again my basic trading checklist, we can see that the overall market trend at this point is downtrend. Why? The price moved, right, low, lower high, low, lower high, low, lower high, low, lower high. Right? So what do you expect the market would do? Again, probably a lower high until most probably at this uh, level. Right? We can check our line chart on where it would probably react. So we expect the market to move down at this direction, going at to this level or key significant level or zone. Alright, that's one way you can identify level or zones. It's multiple touches, multiple reactions on a certain level or zone. Right? So if I can look for an opportunity, I would probably sell this market. Right? So I'll just delete this uh, arrows. Sorry. Right? So meaning I want to sell at this level. Right? Going back to the price chart. So we can also look for another key significant level or zones. Again, for the next step, we look for the level. Am I approaching the key significant level of resistance, support, or am I at the middle, or am I still approaching? Right? So if I would mark my key significant level or zones, you can probably see here that this is a key significant level or what? Or zone. Right? Going back to the candlestick. So I can see that the price is approaching what? My resistance level or zone. So we already know that whenever we are at the resistance level or zone, key significant level of resistance or zone, we would want to short or have a selling position at this level, right? So if I would probably make a trade here, I would wait for a candlestick formation over here before taking a trade. I will not take any trade blindly without any candlestick formation. That is my one of the checklists that I'm waiting for. All right. So again, I already know the market bias through market structure that the overall trend is bearish. Next step, I already have my key significant level of resistance and what support. So what's next? I ask myself, where am I at the current price or level or zone? Am I approaching? Am I already at the zone? Or am I already at the support or resistance? Right? So right now I know that I am still approaching the key resistance level or zone. So I would wait for the price to react to this level or zone prior to take any trades or position. Right? Then after that, I will look for what? Candlestick formation. Any selling pressure, any rejections that I see, then I will sell this market going where? Setting my target. If I would take a trade, for example, I would find any selling pressure candle here, right? My stop loss above this structure, and then my take profit would probably here, right? So that would provide me at least 1 is to 3.5 risk to reward ratio, right? So you see the approach, it's very simple. I'm just applying price action plus market structure and candlestick formation for my entry. But then again, I should always know what is my risk appetite, what is my risk percentage that I'm going to place whenever I have a certain trade. You should know that prior entering a trade. And definitely, more importantly, should always set a stop loss. Don't trade without a stop loss. Again, guys, if you want to be a long-term, better trader, always use a stop loss, right? Always have the discipline to wait for the setup, to let the market run and do its thing, right? It either hits your stop loss or it hit your TP, right? So always remove your emotions. No emotional attachment on every trade. Once you place a trade, that's it. Do something else, close your computer, and monitor your charts on a higher time frame, right? Only monitor the charts at the higher time frame. Why? Your lower time frame is for your entry. Unless you are scaling in or adding positions, then you would probably monitor the chart on the specific time frame you enter, right? So this would be my setup if I'm going to short this market. However, I will still wait for the price action at this level prior to taking any trades on this pair, right? Euro yen, right? So what if, you should always ask yourself, give yourself scenarios. What if the price broke this key significant resistance or level or zone? Again, if it broke this structure, definitely what would the market do? The market would probably correct itself going where? Reacting at this same level or zone, or at least this level or zone, forming what? A lower high, thus creating a bullish momentum going up. Alright? So it would probably react where? This level or this level of the price. So we have two scenarios over here. It will probably react here, going down, right? So again, give yourself scenarios. Don't just depend on one single setup, right? So in this way, you are being more reactive than predictive. That's why I always tell my students, give yourself scenarios and always look for the downside. All right. What if? Always ask yourself, what if the price didn't go your way? What would be your reaction? What will be your plan? All right. So that is how you get better in every trade that you do. You always set yourself scenarios as well as conditions wherein the price would react, if it react going your way or if it would react uh, against you. So that will help you be disciplined to either wait for the setup or neglect the overall plan of trading. All right. So this would be the setup for this pair. But I would expect the market to react to this level for a short position. Again, more reactive than predictive. Right? I'm still waiting for the price action over here prior to entering my trade. Right? So that is how I analyze the market using basic what? Key level of significant resistance, support, key level of significant level or zones, and using just price action and market structure. So trading shouldn't be complicated. You shouldn't bombard or clutter your chart or your chart with a lot of indicators or whatnot prior to entering a trade. Again, decision making should be simple, decision making should be straightforward, and you should have a system that have rules that will help you decide as quickly as possible but as high probable as possible. All right? So that is my way on how to approach naked chart trading. No indicators, no clutter in the charts, just simple price behavior interpretation and price candlestick interpretation. Alright? If you still don't know how to interpret the price using the candlestick, again, you can check my past videos on reading the Japanese candlesticks. Right? Using selling pressure candles, buying pressure candles, some basic but powerful candlestick formations, right? As your entry signal or as your confirmation bias for an either sell or a buy, right? So now I have this position. I will wait for the price action over here before I will take my sell position. All right. So that's it for today's video. I hope you have learned something on how I approach the market. Again, using naked forex or naked chart trading checklist, just basic. Again, as I've said, you can just customize your own checklist before entering a trade. Set yourself some rules or criteria prior to entering a trade. Give yourself scenarios. uh, be reactive than predictive. Again, anything can happen in the market. We cannot predict the market 100%, but if we have a certain rule, or if we have certain rules to follow prior entering a trade, then that would make our trade high probable. All right. So that's it for today's video, and I hope I hope you have learned something, and I hope it would add to your knowledge when it comes to approaching simple chart analysis using just clean charts, no indicators whatsoever, just reading the price action, market structure, and candlestick formations. Again, trading shouldn't be complicated. I truly believe that the more simple your analysis is, the more clearer your decision making is, the more straightforward your trade will be, and there's always clean state of mind and less emotional attachment in every trade, right? Don't confuse yourself with adding more indicators or clutter in your charts. All right. So again, I would just like to give a big shout out to my VIP students, to those who already register at the TFE bootcamp. Again, thank you. We still have another session on this coming Sunday. For those who haven't registered, you can still catch up and message me for the registration process. Again, thank you, and see you all on the next video. Bye bye.